McDonald's stock has fallen to a valuation level that has historically appeared near major bottoms. Its price to sales ratio is now more than two standard deviations below its 2-year average. Since 1988, this signal has appeared only 9 times, and 7 of those 9 occasions were followed by a bull run. At the same time, McDonald's trailing and forward P/E ratios have fallen toward levels that have acted as valuation support for almost a decade. So, has McDonald's already reached its bottom? Or could the stock remain under pressure for several more months? In this video, I'll explain 4 indicators to determine whether McDonald's is undervalued, where a potential bottom might be forming, and what the historical data suggests could happen over the next 1 to 2 years. Let's begin with the price to sales ratio. This indicator compares McDonald's current P to S ratio with its average over the previous 2 years. When the indicator moves below -2 standard deviations, it means the stock is trading at an unusually low sales multiple relative to its recent history. McDonald's is currently below that -2 standard deviation level. Looking back to 1988, this signal has appeared 9 times. In 7 of those 9 cases, the stock eventually entered a meaningful bull run. More importantly, most of these signals appeared either near the final bottom or during the broader bottoming process. The two major exceptions occurred in September 2000 and September 2002. After both signals, McDonald's continued declining before eventually recovering. However, the September 2002 decline was followed by a sharp V-shaped recovery, showing that even when the indicator did not identify the exact bottom, it still appeared during a historical attractive accumulation period. But there is an important limitation. When we zoom in on the past 6 years, we can see that McDonald's can remain below -2 standard deviation for quite some time. Sometimes the signal lasts only a few days, but in other cases it remains active for several months. Therefore, falling below -2 standard deviations does not guarantee that the stock has reached its exact bottom. It tells us that the valuation has entered a historically unusual and potentially attractive region, not that the stock must immediately reverse. This is where the backtest become useful. Across McDonald's complete historical dataset, investors who dollar cost averaged while the P2S indicator was below -2 standard deviations and held their position for 1 year generated an average return of approximately 30%. Historically, this has been a strong accumulation signal, even though it has not always identified the exact day or month of the bottom. So, how can we determine whether the current bottom is already forming? For that, let's look at McDonald's earning-based valuation. Since approximately 2016, a trailing 12 months P/E ratio near 20 has repeatedly acted as valuation support for the stock. McDonald's recently reached a trailing P/E ratio of approximately 21.4. That is not quite at 20, but it is very close to the valuation region where buyers have historically started stepping in. We see a similar pattern in the consensus forward 12-month P/E ratio. Since 2016, a forward P/E near 20 has also acted as an important support level. McDonald's recently revisited approximately 19.5 times forward earnings and has now started trending back upward. The fact that both of the trailing and forward P/E ratios approached their historical support levels strengthens the argument that McDonald's may have already reached its bottom, or at least moved very close to it. Before we examine the next indicator, if you find this type of data-driven stock analysis useful, please like the video and subscribe to the channel. It genuinely helps the channel reach more investors, and it allows me to continue producing analysis based on historical valuation and back-tested market signals rather than simply guessing where the prices might go next. Now, let's look at McDonald's dividend yield. This indicator compares the current dividend yield with its average over the previous 2 years. When the dividend yield becomes unusually attractive relative to the recent history, the indicator enters a green zone. Historically, these green signals have often appeared close to McDonald's major bottoms. As the yield becomes more attractive, income-focused investors have a strong incentive to accumulate the stock, which can create additional buying support. Looking at the most recent period, McDonald's entered this attractive dividend yield territory after its share price fell below approximately $300. This does not mean that every price below $300 is guaranteed to be the exact bottom. However, the historical relationship suggests that prices below $300 may represent a reasonable long-term accumulation area. We now have three separate indicators pointing toward a similar conclusion. The P/S ratio is more than 2 standard deviation below its 2-year average. The trailing and forward P/E ratios have approached levels that historically acted as support, and the dividend yield has entered a region that previously attracted buyers near important bottoms. Finally, let's examine McDonald's price relative to its earning per share. Historically, McDonald's stock price has maintained a strong relationship with the company's EPS. As earnings have increased over time, the share price has generally followed. Analysts expect McDonald's EPS to continue growing over the next 2 years. When I regress McDonald's historical share price against its EPS and apply the expected earnings estimates, the model produces an average projected price of approximately $350 over the next 2 years. That would represent roughly 30% upside from the current share price. This should not be treated as a precise price target. Regression models provide a range based on historical relationship between price and earnings, and the actual result will depend on McDonald's future growth, margins, market conditions, and the valuation multiple investors are willing to pay. Still, the results align closely with the P/S backtest, which also produced an average 1-year return of approximately 30% when investors accumulated below -2 standard deviation. So, what is the final conclusion? McDonald's may not offer explosive growth, but several independent valuation indicators suggest that the stock has entered a historically attractive region. The P/S signal has preceded bull runs in 7 of its 9 historical appearances. Both trailing and forward P/E ratios recently approached long-term support level. The dividend yield suggests that prices below $300 have become increasingly attractive to long-term investors. And based on the historical relationship between price and EPS, the stock could potentially move toward approximately $350 as earnings grow over the next 2 years. McDonald's could still experience short-term volatility and the stock may spend more time building a bottom. But based on the historical data, this appears to be a strong accumulation opportunity than a reason to panic. The exact bottom is impossible to identify in real time, but when multiple valuation indicators begin pointing in the same direction, the probability of an attractive long-term setup become much harder to ignore. At the end, I would like to thank you for joining me and staying up until the end of this video. See you next time.